last session of the day. We've spent 9 hours and 45 minutes traversing the globe from Europe to the US to APAC, and now we're closing it out with a great opportunity to hear from Angelina Kwan of Hashkey Group, Walter Jennings of Hashkey, and Scott Thiel of DLA Piper. The topic that we're going to talk about is Get Tokenized, Opportunities for Capital Raising on Digital Asset Exchanges. Just to keep in mind, Walter, Angelina, and Scott, there are a lot of questions about this, significant questions. And unfortunately, next time on September 21st, we're going to have you wake up in the middle of the night to address all the American folks. So just keep that in mind for the 21st. But thank you so much for joining us today, Angelina, Walter, and Scott. Talk to us about what we need to see, what we need to be aware of, and how the world is changing around your securities and tokenization. I know that Angelina just completed her law degree, MIT, and you're a speaker, or was it Harvard, MIT, somewhere beautiful, and you'll talk to us about what's happening now and what's going to happen in the future. Thanks. I'll let you guys take it away.
Great. Thank you very much, Kareem. Good morning, good afternoon, and good evening, wherever you're dialing in from around the world. My name is Walter Jennings. I lead marketing and communications at Hashkey Group, and I am your host for today's panel. We're going to talk about Get Tokenized, Opportunities for Capital Raising on Digital Asset Exchanges. And we wanted to approach this from the perspective of an issuer. If you are a company or an investor, or you have real estate, or you have assets, how do you go about this, and what is the process? I'm joined by, on my right, Angelina Kwan, who I'll ask to introduce herself in a moment. She serves as Chief Operating Officer and Chief Risk Officer for Hashkey Group here in Hong Kong, and has had COO and director positions with digital asset exchanges, the Hong Kong Exchange, senior roles with Cantor Fitzgerald and the SFC. Also joining us is Scott Thiel. He's the partner at DLA Piper, and he's the Asia head of their global technology and fintech sector initiative. He's really the go-to guy, advisor for all things data and tech related for his client. And Scott has a bit of a secret weapon up his sleeve when it comes to tokenization, and I'm not going to lift the lid on that surprise quite yet. I want to start by asking the panelists to introduce themselves and what's the relevance of their role to today's subject. So let me turn first to Scott, who we haven't seen yet. Scott, can you briefly introduce your role and your relevance to the subject of tokenization?
Thanks very much, Walter, and great to connect again, Angelina, as well on this next panel. I'm excited to be here. So yeah, it's a very broad topic, I think, is the first observation, and there's a lot of opportunity in this space. It was fascinating listening to the last couple of sessions in advance of this around cryptocurrencies, and in many respects, I see the evolution from crypto into NFTs, and then truly sort of asset-backed, fractionalized digital instruments as being the next wave, and really the future of finance, the digitization of these markets. So, in terms of my role, you've introduced me as the head of the tech sector, which I am. My background is, I'm a computer science grad turned lawyer. That was a decision I may have regretted if I look back. But IT wasn't yet cool. I'm old enough that when I was doing that, it wasn't yet the future. But what we've been doing, and you alluded to the secret weapon, so what we've been doing at DLA Piper over the last couple of years, we've built our own tokenization engine and platform as well, so we're able to create digital assets for clients. So in addition to sort of helping clients with decisions around technology, particularly as it relates to, choices of DLT technologies, and there are some really fundamental different attributes of those technologies that are going to be, better suited to different use cases in this space around tokenization. And then we can help clients with the kind of the transliteration, the taking the, structuring the investments and the investing documentation, which is really the role of the traditional lawyer that we've always done. but then being able to now take that and then morph that into the digital form to ensure the smart contract is a faithful representation of the investment documentation, and then to help clients with that full journey. So, we can sit with our Toco engine now with clients. We can help them build digital assets. We can bake in, information, diligence information, investor rights, and attributes, and tokenization kind of tokenomics around the flows of monies, and actually help create that digital product to help then take that to market for them. So it's a combination of law plus tech.
Sorry to jump in. I'd also want to now turn to Angelina and ask her to introduce her experience and relevance to the subject matter.
Sure. So I've been working with a number of digital asset exchanges, and I think this is probably the most exciting area, as Scott was saying. So I am now the Chief Operating Officer of the Hashkey Group. What we are offering is a exchange that hopefully will be the second licensed exchange in Hong Kong. We have over-the-counter services in terms of we sell Bitcoin, we sell digital assets, but we also have a fund management arm, and we also have a number of other businesses, including tokenization. And one of the reasons why Scott and I have been working together is we're going to work together, hopefully, where Scott provides that secret weapon to tokenize the product, and we actually list and sell that product on our exchange. So why is this important to have both people working together? Is because Scott has the legal side in terms of the lawyers that actually will look at prospectuses, look at prospective deals, and then our exchange will actually list it on our exchange, and then we will have the clients to actually sell these products too, which makes an exchange much more interesting, but not just selling buy and sell Bitcoin, but also selling interesting alternatives to clients. So you've got the traditional digital assets, but you also have what is called tokenization now, where you're taking interesting projects, anywhere from real estate, which is something that Scott and I have been talking about, to assets like receivables, to horse racing, horses, and tokenizing horses. So the opportunities are there, and what you need to do is you need to commoditize this and put it into a format that can actually be tokenized and then sold to individual investors. And this isn't investment advice, but this is a way that people with Bitcoin or with assets can actually invest in other assets at the same time through a digital asset exchange like Hashkey. So we will help clients buy and sell their digital assets, but we will also give them the opportunity to get invested in interesting real estate around the world, or horse racing, or whatever it happens to be the assets. And there's no stops in terms of, there's no boundaries in what can be done, as long as it's actually regulatorily compliant and legally compliant. And that's exactly what Scott and Hashkey would be doing.
Fantastic. Scott, can you explain to us what's the difference between tokenization and a traditional IPO?
Yeah, that's a great question, Walter. And I'm going to start by saying I'm not best placed to answer it, including because, as I think one of the last speakers was just saying, I'm not a capital markets guy. I'm a technology contracts lawyer. So I come at this question unencumbered by too much knowledge about the existing capital markets. However, there are some definite distinctions and features. And I was having a conversation yesterday with a potential client who was talking about listed REITs, and how there's already fractionalized real estate, and people can already buy and sell shares in these and therefore participate in real estate. And I asked him if he'd ever met an investor that felt their REIT personally and passionately and really had a connection with that asset in any meaningful sense. And he looked at me blankly and I said, well, there's your answer. Most of the kind of the way of people using listed shares as a way of participating. Either you're buying a share in a company that does a broad range of things, even if it's really a holdco for a bundle of assets. It is typically that, it's a bundle of assets. Like in the real estate context, you're usually talking about in excess of 100 different pieces of property in there. So what am I really investing in? Well, I'm investing in a sector. I'm not really investing in a building, for example, which I think is a fundamentally different thing from saying, look, I'm investing in a project, an individual project or an individual building. And I can walk past it and say, I own a piece of that. And there's that real immediate connection between the asset the operator of that asset, and then the investor. So I think it's a fundamentally different type of investment structure to that which we're seeing, today. And the reality of a lot of those listcos is that they are the domain of pension funds and large scale institutional investors. I think as we look towards DLT technology being a way of democratizing finance and gaining further participation by a wider class of investors in a more direct way, I think it's those kind of features that are going to be fundamentally different. And Angelina and I are both working on this problem from different ends of the spectrum. These are going to be a lot easier to hopefully list and get raised, rather than the enormous complexity and cost associated with an IPO, which is a very large scale event.
So that's the area that Scott has touched on something. In tokenization, we can be a lot more nimbler. The amounts that are going to be raised will probably be smaller. So Hashkey doesn't see itself as interfering with the largest exchanges in the world. We're going to be helping institutional investors that have assets that they want to tokenize, that are smaller in size and easy and nimble. And the cost to getting to market and tokenizing and getting to the end client should be cheaper and more transparent. And with the neat way that smart contracts work now, you can basically track interest payments, you can track all different types of things that you couldn't do before. But once you own a token, you can receive payments for your interest or your share of the rent or whatever it happens to be, as it's stipulated in the contract. So for tokenization, it brings to institutional investors choice, but it also brings ease to market. It brings lower costs, which is what Scott just said, and it brings a way that people can actually hold tokens and invest into tokens in a different way.
Okay, but I think tokenization is of interest to more than just institutional investors. So I'm going to ask, what are some of the use cases? What can be tokenized?
Well, we've talked about real estate as one, and I think a lot of clients have been going to Scott on real estate. But we're seeing questions about possibly a whole consortium of racehorses, for example, or we're seeing a consortium of that a company has a lot of receivables. They're willing to pay interest on that, and a regular higher rate of interest, for example. So if you're somebody that trusts in the company, this is a well-known company, by the way, and they want to free up some of their receivables and they're willing to tokenize them and pay interest off of that, then that's something that might be interesting for people that want a steady rate of return. And if we can bring enough people to the table for that, us as an exchange and us as a company would be interesting, for example, to investors like Link2. So I think it's a whole ecosystem that's opening up. And what digital assets has done for both Scott and for DLA and for Hashkey is to open up an entirely new area of business for us to explore and for us to get into and develop new clients. And that's the most exciting part, which means new investment opportunities.
Fantastic.
Maybe I just add to that, if you can have a quick moment there, Walter. I agree with all of what Angelina says there. Yes, we've been doing a lot of real estate, but actually the first project we signed after we launched Toko was a subsea phosphate deposit, and we've actually now got 3 different mining projects where people are looking to tokenize the assets before they're dug up, essentially, and providing sort of future rights to it. We're also seeing other asset classes, bundles of intellectual property rights, music, patent portfolios, video, energy futures, art. We've done some art, including NFTs and also fractional art projects that we've already done. So there really is no limit to this. And I think one of the interesting things for me, we did a bit of a brainstorming session yesterday. There is this huge illiquid alternative asset market, class out there that it really hasn't found a way to market yet. And I think tokenization represents, and again, rather than going head to head with perhaps what's happening in traditional capital markets and those types of things, this is actually an opportunity to tap into and provide liquidity and financing for the estimated 60% of the world's GDP that is currently totally illiquid. And that, I think, is the really interesting opportunity here.
Okay, well, a lot of our listeners are with startups or small and medium enterprises, and we earlier made a comparison to this being a lower cost and more simplified approach than an IPO. What are some of the capital raising opportunities available for our audience and the business professionals? Angelina?
Well, one of the things, as I said, is if you've got assets that are of value, it's a way for you to unlock that value. So as we said, one of the biggest shipping companies in Hong Kong, for example, are looking for ways. They know that they're going to receive the receivables. They know they have certain assets on their books, but they want to make their balance sheet more nimble, and they want to use their assets in a more efficient manner. So in that case, they're looking for alternatives, and that's why they're investing in digital exchanges to be able to do that and take part in that, not only as an investor, but also take part as a user of this type of exchange. And also, a lot of clients have digital assets, want opportunities to invest in new assets, which may be stock, which may be receivables or shares of companies. And this is a way for people to do that.
Scott, what does an issuer need to prepare? How invasive is this process? Well, you're not a capital markets guy, so I won't ask you to compare it to an IPO, but tell us about the process and the steps along the way.
It's a really complicated question, that actually, and it partly depends on the nature of what the issue or the asset owner is intending to do, and what bundle of rights they are trying to tokenize, what their objectives are. Is it a financing, or is it a future sharing of revenue? So there are some pretty fundamental questions. We've actually developed now a quite a complex Q&A to help tease out the particulars, because one of the things I think we're seeing, the first thing we are definitely seeing is that those that are coming to talk to us are in that early adopter category, and a lot of people that are interested, and they're interested in watching on and seeing how things develop, but they're not ready to go. So we are looking for that kind of first mover type of asset owner that is looking to make a splash, do something new, take something of a bet on that this is going to be the future, and that trickle is starting to turn into a rush already, and I think we're still just at the bottom of that hockey stick, to be honest. But there are some fundamentals that are important, and one of the things we do when we're qualifying deals is really look at why are you trying to do digital? Because if this is the last possible chance of doing a fundraising because nothing else will work, there's probably a problem. And there is the saying that going digital won't make a poor offering good. It could make a good offering excellent, and that's a really important distinction. So this has to be a good product. It has to be well run, well managed assets. It has to be a trustworthy issuer. It has to be structured in a way that is attractive to investors. And none of this is new. These are the same fundamentals in any investment. So really, that's important that the issuer recognizes that there is a real process, and there are legal compliance issues, and there are disclosure documentations, and there are investor rights, and none of this is new. This is the same really in terms of any financing and fundraising activity that might be undertaken today. It's just now leveraging the technology to do things and to carve things up in a way that perhaps products are emerging that didn't exist before, but those products still need to meet those fundamentals of, are you telling people the truth? Is it going to perform? Do people believe in your vision? Do they believe in you? All those same types of questions that are essential. Otherwise, you can structure a project and go to market and there are no buyers. So, it's the same fundamentals.
And that's something we would want to put our clients into too, as exchange members. So it has to be good for the clients also. And that's why our structure, we would use a listing committee that would actually look at the merits of the transaction, relying on our partners, like our lawyers, like DLA, that would actually be vetting and making sure the asset is actually there. So it has to be good for the client, it has to be good for the market, or else our reputations as professionals are not going to be there. And this is a burgeoning and very, very growing asset class. And it's really, really important that we do the right thing for our investors. And hey, we're here to stay. We made our reputations and we're here to stay. And that's what we're trying to build right now.
Okay, so far we've talked with the lawyers and the exchanges. Who are the other parties involved in the tokenization? We have the asset owner. Mm-hmm. We have Scott Thiel at DLA Piper, and we have Angelina Kwan at Hashkey Group.
We have the bean counters. We have the accountants that will opine that the assets are actually there. And we will have the technology people that will basically the tokenizing the token, which Scott has in terms of his secret weapon. We also have the promoters that will actually be working with the companies or whatever the asset is in terms of putting together prospectuses or putting together a package so that this can be marketed outwards. But the process will be a lot tighter in terms of and quicker to market if it's a smaller deal and we have all the different pieces in place. And that's what both DLA and Hashkey are putting in place now. So we ourselves have procedures in terms of our listing committee, in terms of documentation, making sure that our regulators are comfortable with this also. This is going to be very, very important because ultimately Hong Kong is an international financial center. And what we want to see is our companies, which are doing great, that are tokenized, will eventually grow to something that may even either issue more tokens or even move to a major listing at a major exchange. So that would be like the biggest kudo.
And Scott, what advantages does blockchain provide during tokenization?
Well, there are a number of features, I think, of distributed ledger technologies, and I use that phrase instead of blockchain deliberately because I think some of the features of, you know, the early blockchains, you know, Bitcoin and Ethereum 1.0, I think there are some benefits to you know, proof of stake protocols, and you know, we've been working with a number of layer 1 protocols, and the attributes of those technologies I think are going to be better suited. So I think it's important to realize that the benefits need to be matched to the technology so that this technology will allow those benefits to happen. So things like liquidity is obviously one, and Angelina and Hashkey providing that digital asset exchange is going to be a key opportunity. Now, compare the stock exchange, which opens occasionally on a few hours a day when it suits local clearing banks, and then it will probably settle sometime in the next 3 days, to, you know, the way a crypto exchange runs today. Always on, 24/7, settlement in seconds. Yeah, you know, so liquidity and finality, key, you know, opportunities in terms of that secondary market piece. I think the nature of the smart contract technology, and, you know, I think I agree with Angelina about the other participants in the ecosystem that she referenced, but we're now starting to look at getting a bit more creative with the use of this technology. So building in automatic functionality within smart contracts so that tokens can do things automatically. Part of the way to drive that automatic functionality is going to depend on external data sources, trusted data oracles that will then feed in information that will be the basis for driving, you know, the if-then statements within smart contract functionality that we're starting to build, so that these things can start operating in an autonomous way, whether that's to do calculations of capital distributions and then indeed automate the capital distribution itself, which is a feature of Toko that we're currently building. So again, I think when we look at the way this technology can be used, these things will actually be able to operate in a way that is far smarter than, you know, I think that the term smart contract has been largely grossly overused, because most of the, you know, efforts in tokenization to date haven't been that smart. They've been a relatively simple proof of ownership if you've got the private key. We're now looking to really extend that and actually create some functionality around the smart contracts. And that's something that can't be done with a share, you know, on a stock exchange. You know, it's just an ownership right, the same type of thing. This technology will enable these assets to be tracked. You'll be able to do dissemination of information, not only at primary issuance stage, you know, sort of the electronic data room stage, but then have a living and breathing data room so that you can continue to communicate to token holders and the world at large about this is what's happening with the underlying assets. So it becomes a real-time living and breathing, always on data room. Now that terrifies some of the issuers we're talking to, which is one of the things, if it does, maybe you're not the issue we want to be working with. But for those that say, fantastic, I finally get to show the world what a great job I'm doing, that's a really interesting conversation. Now, compare that to what I get from a share and a share registry and the occasional public disclosures that they're forced to make. So I think there's going to be lots of opportunities as to how the technology can really underpin a lot more transparency, the creation of new products, liquidity and faster settlement situation as well. So I think quite a lot of opportunity out that we're only just beginning to scratch the surface of.
Great.
And with these tokens now, we've moved so much further than the early 2017, 2018, where you saw the ICOs where basically they were sold and nothing happened. But now you can actually track. We have AML capability, we have trackability and payment ability. And that's the exciting part, because investors really can see their investments and information can be sent out about their investments, which you didn't have any tracking before. So we're light years different now, and that's why this has become such an interesting area for both investors to invest in, as well as issuers to invest in their assets to do so.
Fantastic. So you have a lot more connection with your investment. Now, if you're an investor and you're looking to participate and understand the various offerings, the STOs coming up, how do you get the alerts? How do you track the different opportunities? Because I assume there are multiple exchanges with multiple offerings. Do you really have to track each exchange?
Well, the interesting thing is not that many exchanges are moving into it as fast as they should be. And many of the exchanges, and we just heard from Kraken, are focusing on trading of digital assets first. In Hong Kong, we have a requirement that requires us to actually, as part of a license, is to securitize an asset. So we have that requirement, and that has become a very important part of our business plan. So that is part of our licensing process required by the Securities and Futures Commission. So we are fully, we are fully compliant with SFC rules, and we will make sure that whatever we do, including tokenization, follows those rules. And that's one of the reasons why it's a part of our business plan in terms of doing a tokenization service. And we're putting together structures, listing rules, listing committee to be able to do that in a fast manner.
Fantastic. Now, Kareem mentioned at the outset that there were a lot of questions from the audience. You can use the Q&A panel. Alternatively, if you don't have an opportunity yet to ask the questions, or we don't have time, A, come back on 21 September, and B, you can reach me on Twitter. My handle is @FacingChina. And also at hashkey.com, you can sign up for our newsletters, and we will be issuing, before the September event, a field guide to tokenization. So a bit of a user's manual. Scott, I wanted, one of my last questions for you before, in the minutes we have, is what are some of the trends you're watching in the tokenization field? I guess it's early adoption, but are there any other kind of areas or issues that you're looking at?
Yeah, there's a few. I'm passionate about the technology, so I'm very interested in watching the way the technologies are emerging. So we collaborate very closely with are a member of the Hedera Governing Council, for example, and they launched the Hedera Native Token Service, which means no smart contracts. You can build straight away on their protocol. And so we've now integrated HTS into Toko, where we can mint tokens on that protocol, and we're looking at doing similar things with other protocols. So I'm very interested in tracking the technology developments. And again, to Angelina's point, go back 3 years. It's been a quantum shift in terms of the technology enablement that's coming out of the protocol. So that's one area. The other piece, and I'm betraying my day job as a lawyer here, is the regulatory trends around the world. And there's quite a lot of regulatory arbitrage to be had. So a lot of our projects that we're structuring, we're ducking and diving a little bit depending on where the regulators have licensed people already, whether there are advantages, disadvantages to certain markets. One thing I've definitely seen in the last few months is the beginnings in certain parts of the world, and I'll cite the Middle East as a great example of a recognition that this is the future and they better get on board. And so I think there are some kind of tailwinds starting to drive some of the regulatory developments around the world, as opposed to fear being the dominant force as it perhaps has been in some markets to date. So we're tracking that very, very closely, because essentially it does dictate where you can, that one of the fundamental questions when we look at what a client wants to do is, okay, well, given what you want to do, what is your route to market? And Hong Kong's, getting there, but it's by no means the most progressive jurisdiction yet. Singapore is certainly ahead as at today, but there are some very interesting, other markets, whether it's Switzerland, New Zealand, interestingly, Europe. There are routes to market in the US, albeit they're pretty clunky and expensive. So there's this huge question of regulatory route to market, and what does that mean from a cost and time to issue perspective. And so we're tracking that very, very closely, and I think we're going to see an acceleration as the fear of missing out starts to take over from fear itself.
Okay, well, we know many markets are driven by fear of missing out, or FOMO. Last question for you, Angelina. Where will we be 1 year from now in the tokenization market?
1 year from now, I expect there will be a number, and this is not investment advice, but I think there will be a number of successful tokenizations. I think investors will be very, very interested. And this is really not investment advice, but I believe this current shift in the market will only make digital asset exchanges stronger. I think investors are adopting digital assets as an asset class. And as regulators around the world, including the SFC, including the SEC and CFTC, come out with more regulations, that is a honest assessment and also a vindication that this is a real asset class. And if you're not in this asset class, you will have FOMO. So in a year from now, I think we're going to have more and more tokens in terms of investor choice and choices for all types of investors, high net worth, professional investors. And I think DLA and Hashkey will be trading them like hotcakes, and digital assets will regain even more value, because I think this temporary change and this temporary readjustment is only temporary. I think Bitcoin will continue to grow. And that's my thing for a year from now.
Scott, any predictions or forecasts? Where do you see?
I'm not going to make any predictions on the price of Bitcoin at the end of the year, as I was put on the spot last panel I was on.
I'm saying, where will we be in 1 year from now?
Yeah, I think I agree with Angelina. We're going to see the first successful tokenizations. I mean, we have a significant pipeline of real deals that are starting to go through. We did this exercise last week when we analysed where we think the market's going to go, and I do think a year is a long time, but it's also a relatively short time in some respects. So I think we will have success stories, without doubt, within the next 12 months across certainly projects that we're involved in across a range of regions. So I have no doubt we will have success stories. That doesn't mean we will have a fully functioning marketplace of marketplaces with digital assets flying around the world yet. That's probably another 2 to 3 years away before we get there. But as I was asked someone recently, what was the volume of trading on the New York Stock Exchange on day one? These things do take some time to grow. But I think a year from now we will have the basis for successful projects that are out there in the market and are trading, and that will start to grow adoption, and it'll be very much a slowly, quickly adoption, I think, soon thereafter.
Fantastic. Well, thank you to today's panelists, Angelina, Kwan, and Scott.
Wait. I have a prediction. I think Scott, Walter, Angelina, you're all wrong. You're all wrong. By the time the next GIC comes along, you will see so much more traction than you see today. It's not going to be a year. It's going to be before the end of the year. I mean, if you look at what's happening in the US, I mean, Securitize raised their B round just under $50 million. I mean, that means a lot. There is one question for you, Scott. Which jurisdictions, in the jurisdictions in which you operate, how is XRP classified?
Oh, well, that's a tricky question, and particularly in light of the SEC's, analysis. I'm almost going to throw to Angelina on a Hong Kong analysis. I mean, we really haven't seen, for example, the SFC coming out swinging at any of the cryptocurrencies at all. And they followed suit and declared Bitcoin and Ether likely to be, not regulated, but they haven't really given any guidance. I mean, I don't think anywhere else in the world really is wrestling with the question and interrogating the same way as the SEC is now. To that end, there isn't any regulatory guidance on that question. We've certainly done legal opinions in a range of jurisdictions, including Hong Kong, Singapore, UK, Gibraltar, et cetera, which have declared, new currencies to be non-regulated assets where there was sufficient utility, for want of a better word, in the nature of those new cryptocurrencies. Ripple has some unique attributes to it because of the way they have, built products and services in addition to it just being a cryptocurrency, and I think that's why it's distinguishable from potentially other cryptos. I'm going around in circles there without really answering your question, but my gut feel is we're not going to see large scale global prosecution of China, maybe aside, because it bans Bitcoin and everything every week. But most markets I don't think are necessarily going to take the lead on prosecuting native currencies of layer ones. That's not. I just don't see that happening, to be honest. We didn't even see it. And Angelina and I have discussed this. We haven't really even seen, with one exception, where there was a wind back of an ICO. We haven't even seen any prosecutions from our regulator in Hong Kong against ICOs, many of which I think were far more questionable than perhaps a true high volume, high usage cryptocurrency. So I just don't think regulators in many parts of the world either have the skills or the appetite for taking on a battle like that, far less, what the legal analysis actually is. I think the regulatory risk for many of them is relatively low. I don't know if you agree with that, Angelina, given your previous role in the regulators.
Yeah, I do agree with what you're saying. And Hong Kong, as you may be aware, holds the seat of the International Organization of Securities Commission's chairperson. So I think where regulators will go is they will hold the exchanges responsible if there are products that aren't up to a standard of which they have set their policy that they're given their license on. So it is that way that they will look at the exchanges if they're licensed. But I think the US has been the most aggressive in XRP from what I've seen, but other markets around the world, we have not seen that yet. However, if there is a scam in Hong Kong where something is not working properly and it's not good, then of course the police and regulators will step in. And I think that would be the case around the world, but we haven't seen it.
Yeah. So yeah, in closing, I would say, having been at this desk for close to 11 hours now, having seen the panels that I've gone through today, the sentiment is more positive than negative, and more positive than neutral in relation to this whole area of crypto, digital assets, regulations, and what's happening as we move forward. So I anticipate a quicker adoption and adaptation of what we're seeing in the near future. It'll be interesting to see what happens. I suspect, just like anything else, at these conferences, we find a thread and we are talking about it, and it doesn't take long for these things to catch up with us. And I think they'll be more positive than negative. So I think you guys are in the right place. You're doing the right thing, and you're the forefront, and I appreciate that and applaud that. So thank you so much for the insights and the work that you're doing ahead of time to make all of these things happen.